and welcome to the India Today Business Today studio here at the World Economic Forum in Davos, Brainstorm 2026 as we call it, and joining us on this part of our coverage two well-known CEOs from India, Balkrishan Goenka, the chairman of Welspun World, and Sumant Sinha, chairman and CEO of Renew. Thank you very much for joining us. Sumant, I want to begin the conversation with you and sort of putting all that is happening in terms of the trade turmoil, frequent geopolitical changes, rollbacks and whatnot, particularly in the climate space, the United States of America, going back on decades virtually of climate-related commitments, plans and strategies. What does it mean in the long run for the broader renewable space and especially from an Indian context?
Yeah, hi Siddharth, thanks so much for having me. Look, I think the fact that the world's largest economy, accounting for almost 30% of global GDP, and by the way, the biggest cumulative emitter for carbon emissions in the atmosphere, if they pull out of an agreement, it's just difficult for that agreement to be as effective as it would have been had they been in, right? So therefore, it's really a setback, I would say, that they've pulled out of course, the COP, the UNFCCC processes, the ISA from an Indian context. It's not good, right? The other thing is that they've also started defunding research into climate change areas. A lot of the measurement, climatic, oceanic, atmospheric measurement actually was happening in the US. All of that is getting defunded. So our ability to predict what's going to happen or understand what's going to happen is also going to diminish to some extent. Having said that, that's the bad news. The good news is, on the other hand, that in COP38 Belém, all the other 192 countries got together and continued to commit to dealing with climate change. And so the rest of the world is saying, you know what, whether the US is there or not, we are still there in the fight against climate change and we will carry on. Now, of course, it would have been more effective had the US been there, but they are not. And so it is what it is, but at least we are carrying on. What does it mean for India? I think not that much, frankly. Our story is more domestically driven. Of course, if climate change becomes worse or bad, it's bad for India because we're a vulnerable country. And to that extent, our people will be impacted by it. But as far as our own rollout, our own targets are concerned, those will continue unabated. And the good news is that last year, India overtook the US as the second largest market for solar installations in the world after China. And so we are making progress. And so if other people join or not, we are certainly seeing this as an opportunity for us to get much further ahead on the energy transition.
Yeah, go ahead.
Just add what Sumant saying is, I mean, we are an investor in US, and you know what, the whole hype of the renewable energy and other thing is all gone. The incentives, whatever was there earlier, is all been withdrawn. So there's a big change. I mean, in US perspective, I can tell you as an investor there, we are investing money there. So all the benefits what we were seeing earlier is not there now.
Absolutely. In fact, taking that point forward, there is constant change, and a lot of CEOs in private and on record are saying that you never know that what will get announced as a new policy of the United States and practically through a tweet or a social post. In that scenario, I want to take that point about being an investor in the US forward, like several other companies. Does that uncertainty cast a cloud on your future investment plans, or is business divorced to some extent from the geopolitical uncertainty that has been unleashed?
You are an investor in US, you feel comfortable as far as US is concerned. But when you see the global geopolitical scenario, I think one can clearly see there's a rewiring happening. I mean, it's not the same scenario. Whether we see the WTO, whether we see the whole world is getting disintegrated in one way or the other. The advantage what we see also is that if you see the FTAs, what is happening today and what is going to be announced, the mother of all the FTAs hopefully on 27th with the EU, I think this is also outcome of this situation. So I think as a country and the government what is doing and the global association, particularly with the business, which was not done in last decade or so, I think is happening in last, let's say, 10 months or so. And that's a fast forward.
I want you to take that point forward on the FTA and explain to us, if you can, from your own company's perspective, what kind of opportunities will the India-EU FTA provide to Indian companies?
So let's talk about first UK. I think it's a part of, used to be, Europe, but I think it's not there. But I think
Their biggest mistake in recent times.
I think UK, with being, we are also one of the large exporter of textile as a group, and I think we were having almost against Pakistan, Bangladesh, neighboring countries. They are having zero duty, and we were having 10 to 15% duty, and 10 to 15% was big number, for a textile business. So I think that is one thing, and same thing in EU. And I mean, we have to see the fine print, but I think we will be in a much better situation, particularly in the labor, where the labor is involved, particularly like leather, like toys, textile, all those things are going to have big advantage in going forward. That is our view. I mean,
that same question to you, and broadly speaking, we've been working on various trade deals, and while a lot of headline attention goes to the US, fact is a lot of work has happened. The EFTA deal has happened, UK has happened, others are in progress, and hopefully we'll have the big one soon.
Yeah. No, look, I think that first of all, in response to your previous question about what's happening in the world of business given all these geopolitical events, the funny thing is capital markets are doing phenomenally well right now. Fixed income markets are awash in liquidity at this point in time. Companies are having a field day in terms of improving their business position, increasing their financial results and so on. So there seems to be a bit of a divorce between what's happening geopolitically and the fortunes of companies in today's environment, right? The question is which is right and which is wrong? Or will there be a sort of a better match between the two, and will sort of the capital markets at some point catch up? We don't know. Time will tell as to exactly what happens. I think as far as the FTA situation is concerned, clearly all these are very good for India. I think we've also demonstrated that even though the US has put a 50% tariff on Indian exports, we are still doing well as an economy. And I think that's a sign of strength to some extent, that the economic growth is continuing. All the FTAs that we're signing with all the other parts of the world, because now there's pressure on everybody else to come together quickly, because you can't sort of rely on the US, and that's good. I think it's very good. With the EU, there are lots of other things we can do beyond what BKG said. For example, on clean energy, there's a lot of research going on there. Can we not use that research to actually improve our own manufacturing capabilities in the clean tech space, for example? So there are quite a few things that we can do, I think, as much deeper partners, and there is clearly a lot of pressure on both sides to come together and seal these deals.
What he's saying is, like GST reforms. This is also, mother of all the reforms, if you can say. I mean, it's a big thing, I mean, you can see the impact. Already the numbers and everything is showing. And I think in times to come, it's going to be a big thing for the country. This would not have been possible in a normal case, I mean, no doubt for people like us in textile is a huge impact. 50% tariff and, $80 billion business with US is a big number. And it's a very big concern. But I think whatever government has taken the action and the growth what is showing, that there is some resilience in the whole economy.
But do you think that growth that has come is sustainable? I mean, was it just like people got a particular kind of benefit and they went out and shopped and then it is going to level off? Or is it sustainable in the medium term?
It is a big thing, The GST is a lot of thing has been cleaned up, The inverted duties, in various industries, and there's a huge impact. Almost like 8 to 10%. That's a big number.
I want to talk to you about infrastructure. We are spending massive amounts of money all across, including, for example, on pipelines, on power, on ports, among so many others. First to you, and then the same question to you in terms of this infrastructure super cycle, as I call it. This is the biggest clearly that we have seen. How long do you think it needs to continue?
See, I think this is just a starting. This is nothing. This is like just a tip of iceberg. This is still, the picture has to come. Why I tell you? Today it used to be like earlier, used to be like power, pani, ghar was a big thing. Today infrastructure is becoming the real vote catcher for every state. I think it is more than the center. The state is spending so much of money. You see what is Maharashtra doing today?
And there are 10 states here, by the way, at Davos, just for the benefit of our...
I know.
That's a different story. It should be vibrant in Bharat. In Davos. That's a different thing. But I think every state, the amount of money they are committing and the amount of the money they're investing, whether it is water infra, road, bridges, and tunneling. In Maharashtra, Bombay alone, they are spending more than 1 lakh crore on underground tunneling, which is unheard. So I think it is going to be a big thing. The question is that whether we have capabilities, whether we are ready to take that kind of volumes, that kind of execution. The biggest thing is that I think we need to build more of L&Ts. I mean, that is where the whole gap is. To get this kind of really to build the infrastructure, you need different kind of level.
Sumant, take that point forward.
Yeah. Look, I think if you just take the power sector as an example, we have currently 500 gigawatts of installed capacity across all generating sources. By 2047, we need to have about 3,000 gigawatts, which is a 6x growth from where we are right now in the next 20 years. And the same thing applies across every single sector that you look at, right? Road building, railways, airline, planes flying in the sky, airports we build, ports, water, everything, right?
Yeah.
And so I agree with BKG totally that, look, we just, maybe 20% of India, the famous McKinsey report said 20% of India is built and 80% still has to be built. And that is absolutely the case right now across sectors. And that's why, we need to work very closely with the government because policy making is very important. The good news is that the government is very responsive. They listen to us. They take inputs from us. And there's a lot of capital coming in as well because people sense that India has a big investment opportunity as well. So you're seeing a lot of pension funds, insurance companies and so on coming in. So I don't think capital is going to be a constraint provided the policies are framed in the right way.
Right.
And there is market demand, which clearly there is. Okay. So it's all going to feed into itself.
Just to add this, there's a big change in the regulator's mind. Particularly, you see the RBI policies. You see even the SEBI. There is a lot of things that are happening in AIF and thing.
You are absolutely right. You touched upon this. 2025 would clearly be the year of reforms. At least at Business Today, we've been calling it that. Yeah. And by all indications, 2026 will also go down the same path.
Government is first time not worried about inflation rather than to reduce the rate of interest further, and that's
actually one of the things I don't understand is inflation is less than 1 or 2%. Why are interest rates still 7-8%? They should be 4%, 5%.
That's a very good point. And some people ask why did we persist with Russian crude and still continue to buy? Well, the answer lies in inflation, which is a far bigger macro. Just a couple of more points. Viewers, I can't begin to describe the kind of weather that we are seeing now. It's early evening here to you. And Sumant, I will start with you on this point. And I was reading a report about some worries in certain global investors for two sectors. AI, whether the investments will pay off and the valuation bubble and hype. More importantly, on green energy. From a green energy perspective, do you think the return scenario is looking favorable on a global basis and India perspective? And how does this nuclear energy reawakening kind of feed into this?
Yeah, so look, I think on AI first, is it a bubble? It probably is. Valuations are probably too high right now, but they may continue to be higher even more over the next 1 or 2 years. So nobody knows when the bubble is going to ultimately get burst. And and I think you're absolutely right. It's very hard for anybody to forecast today how far AI is going to go. The best forecast could be off by a factor of 2 in either direction, too high or too low. So nobody really knows, but everybody is investing a ton of money into it, and only time will tell what happens, right? As far as your second question is concerned around, what was the second question?
Basically nuclear energy and the returns on green power.
So, nuclear it's good that the government is opening it up. A lot of the actual guidelines and rules need to still come out. But nuclear is not something that is going to happen tomorrow. It's going to take at least 10 years before you start seeing installations happening because technology has to be matured, which is not the case right now. The amount of people to execute projects, there's only one entity that can actually execute nuclear projects. So we need much more of the infrastructure to get built, and that will take time. As far as returns in green energy are concerned, look, one of the problems that we have in India right now is the capital markets have gone very high. And therefore, everybody feels that you can just build a little pipeline, go to the capital markets and get a fantastic valuation.
Well, there was a very significant correction today.
Sumant. That is true, but still anyway. It will take time for people to register these changes. So I think that's playing out, and that's why people are becoming too aggressive in some of the bids that we are seeing.
I just want to add on AI, we are a very large player in the midstream in US. and we supply all the pipelines, and we are the largest player, by the way, from in local, and all the midstream company who supplying gas to the utilities, and utilities have tie up with the this data centers. What I understand from them, from my customer, even if 20% of investment comes, there is enough business for next 10 years. And when we talk about nuclear, he's saying nuclear is 10 years away.
Exactly.
This is what is a basically gas, which is you just transport the gas, no transporting of electrons, because there is no grid. I'm talking about US story, and you are next to the data center, and there is a advantage from the angle of the power and the cost.
The world is changing, viewers, and it's been a world in flux, constant uncertainty. But I take away one message from all the conversations, including with these two stellar guests here, is that in all of this, good Indian company CEO is always on the lookout for opportunity. There is no pessimism. They're always optimistic, and they want to grow because India needs growth, and the scale, as Sumant said, 4 to 5 times is a base case for pretty much every sector. Mr. Goenka, Mr. Sinha, thank you very much for your time with us today. With that, we wrap up our coverage so far. We'll continue to come back with more. Until then, goodbye.
Thank you.